If you're thinking about closing your bank account, hold your horses for a moment. Because if you hold an account with certain providers and then you close it, you won't be able to open up another one with them in future. Now, there are a few good reasons to close an account if you're no longer using it. Firstly, if it's one of those accounts you've had for ages and almost forgotten about, you could be vulnerable to fraud. If a criminal gets hold of your information or steals your identity and manages to get access to your money, you're less likely to notice it. Secondly, if your account charges fees and you're not making the most of it, it's a waste of money. And of course, you might need to close an account to get a better deal elsewhere, from bank switching to some ISA transfers. But there are also some downsides. So if you close an account with a negative balance, it could harm your credit score. And even if it's not in the red, closing an account that you've had for ages isn't good for your credit history. In this case, it might be worth keeping it open even if you don't use it, because lenders like to see you can manage accounts responsibly over a long period of time. But we're not talking about that today. Rather, it's something that's hidden in the small print of a handful of banks. If you close certain accounts with certain providers, you won't be able to reopen an account with them in the future. So if you shut your account, that's it. You can't come back. So you've got to think carefully about whether that's okay with you. Now, there doesn't seem to be a logical reason why some providers won't let you open an account if you've closed one previously, while other banks do. It just seems like a cynical ploy to stop customers leaving. The good news is that if you are with one of these banks and you want to move your money elsewhere, there's no harm in keeping your account open with a small amount in it. Just make sure you check your provider's rules about dormant accounts to avoid your account being frozen as a result of it not being used. But before I reveal who the banks are, I think it's important to explain that closing your account is a very different scenario to having your account closed by the bank or provider. If you break the terms and conditions of your account, even if you don't know you're doing it, your bank has the right to close your account, and you could be blacklisted from that bank and other banks within its banking group. So this could include holding money for someone else in your account, or more obvious things like if the bank suspects you've been up to something shady, like fraud, or you've given them false information. Now, we hear from people all the time who've had their bank account closed without warning, and they've no idea why. What's annoying here is your bank is unlikely to tell you why it's closed your account. So if you're innocent, it can be really frustrating. However, you can complain to the bank, and if it stands by its decision, go to the Financial Ombudsman Service, which will decide if the bank's done anything wrong. So with that covered, I've asked the biggest banks and financial firms what their policy was for customers that leave but might want to reopen an account in the future. So starting with the providers that don't let you reopen accounts once you've closed one. Maybe surprisingly, but Chase is one of these. So Chase says that currently customers can't reapply for an account if they previously closed one. This is because allowing customers to re-onboard after they've left isn't a functionality it offers at the moment. However, these rules only apply when you close your entire account down. As you can open as many as 10 current accounts with Chase, you can switch additional accounts away to take advantage of bank switching offers. Just be sure to leave at least one Chase current account open. Chip is another. So Chip's not a bank, but it does allow you to open up savings accounts and ISAs, which are held with a partner bank, so you still get that FSCS protection. But if you have a stocks and shares ISA open or a cash ISA open and you close your Chip account, you won't be able to open up another investment account or cash ISA in the future. The same goes for when you request an ISA transfer from Chip to another provider. You can only transfer the whole amount, which automatically closes down your account. I did ask Chip for more information on this and an explanation as to why this is the case, but it didn't respond. And finally, Starling. Starling says it's unable to offer any new accounts to previous account holders at the moment, although it says this is temporary. This is because it's currently doing some work behind the scenes, but will reopen new account applications to previous customers very soon, it says. However, one former customer in the Be Clever With Your Cash Facebook group said this issue has been ongoing for 2 years, but when I asked Starling about this, it didn't give me any explanation. And now, on to the providers that do let you come back. When we asked these banks, they all said you could reopen an account in the future, but bear in mind this is not guaranteed. Each account will have acceptance criteria, so you'll still need to meet this in your application. HSBC, First Direct, Lloyds, Halifax, Bank of Scotland, and Metro Bank all said if you close your account, you can come back at a later date and reopen an account, providing you meet the eligibility criteria. Monzo is slightly different as there are conditions, so you'll have to wait 30 days before trying, and you'll need to contact customer services first. Plus, Monzo says there's no guarantee it will be able to reopen your account when you request it. Nationwide says, as a general rule, there'll be no issue with a customer opening a new account at a later date if they've closed one previously. However, again, this is providing you still meet the account criteria. So for example, if your credit score decreases or you move abroad, you might not be able to open a new account. Plus, if you come back to Nationwide, you might not qualify for introductory offers. For example, customers who open a FlexDirect current account can only benefit from the 5% credit interest and cashback offer once. So you'd not get this if you reapply for this account in future. Moving on to Plum, customers can reopen their account after closing it. And in cases where you can't do this automatically, the customer services team will help you do it manually. With Revolut, you can open a new account in the future too, or you could try and reopen the closed one, although Revolut says it's not as easy. You'll need to have your ID document with you and open an in-app chat with Revolut support. Staff will then look into whether they can reactivate your account for you. If you're a Santander customer, you can also reopen an account, providing you meet eligibility requirements. Santander told me there's no limit to the period of time which needs to pass between closing the account and opening a new one. However, there are restrictions around benefiting from a switching incentive. On to Trading 212, you can open a new account at any time with the same email address you used previously or a different one. And finally, TSB says there are no restrictions that would prevent a customer who had previously cancelled a product with TSB coming back to take another in the future. And that's it. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.